Incredible swing inside of the Fed Fund futures. But what's even more amazing is the swing that we've had inside of the stock market. Remember at the end of March, the beginning of April, there was a rate cut that was being priced in. There was a rate cut in June. The meeting that we just had yesterday, there was a rate cut that was being priced in. And the market streaked higher from our profit target, 1,400 points, until the meeting yesterday where 8 of the Fed members, which told us how they were going to vote in the days leading into the FOMC statement prior to the blackout period, voted to potentially raise rates in 2026. Now, for a brief moment here this morning, that second rate hike was being priced into 2026. Right now, there's one. It's priced into September. And what I want to point out here before moving on is how close these numbers are to being pushed into the second hike being pulled into January and then potentially even into December. And we've squeezed higher on the indices up into these highs here, and that makes everyone very optimistic about, well, there's only going to be one. That's not so bad. That's not so bad. Until we take another turn down. And I'm going to show you, this is essentially the 6th retracement short from highs here that we've been inside of this week since failing to break out of these highs and having a daily close below the previous high. Very concerning looking, right? But what I'd like to point out is Wall Street always gets their fill. And when you think about the leading indicators, as far as the dollar goes, look at how much room that there is. The dollar completed a profit target. It's breaking out of its highs up here. Incredible move. But there will be another pullback before we continue the dollar strength trade that's going on. And the next pullback is down here at the 194. With the negative correlation that we currently have, what would happen if the dollar made this pullback into support? Well, the indices would run back up into their previous highs. Would that make them bullish? No, it would be the entry to the next dollar long setup in its series. It would be a huge head fake. It'd be a huge bull trap if that was the case here. Now, are there other more aggressive variations of support that could keep us from trading back down into these larger support levels? We're sitting at our highs of the year. The old previous resistance is actually acting as a form of support here. So there is, I think you could make a decent case here that there is a more aggressive variation of this support from the perspective of just the overnight lows to highs. And so we have to keep paying attention to these more aggressive variations of resistance and not automatically assume that the indices are just going to run right back up into their previous highs, right? We're going to find out where bank opens up here in just a moment. And its price action is going to be very important as we move forward into the trading day. This is the last full trading day of the week. We're going into a trading halt tomorrow, Juneteenth. A trading halt. It is a bank holiday. And inside of that environment, this is the last day of the week before going into a holiday extended weekend where market participants who understand this data that we've just had, where Warsh is essentially not doing what Trump had hired him to do, raise or cut interest rates to zero. He is sounded very optimistic yesterday. And he, kind of like Powell, wanted to be Volcker. Warsh wants to do. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.